Welcome to Stock Talk. If you're looking for insightful analysis on the market's biggest moves, definitely hit that subscribe button right now. We try to deliver the kind of deep dive that makes you feel genuinely well informed. And today, we're doing just that. We've got an exciting opportunity to peek behind the curtain of, well, one of the most legendary investors of all time, Warren Buffett. You know the name, the reputation, but what's he really doing with Berkshire Hathaway's money right now? So our mission for this deep dive is crystal clear. We're going to unpack the latest strategic moves from Berkshire Hathaway, specifically looking at their Q2 2025 portfolio. We actually have their official SEC 13F filing from August 14th, 2025, hot off the press. Now, for anyone new to this, a 13F filing, it's basically a required quarterly report, shows the stock holdings for big institutional managers like Berkshire, gives us a pretty transparent glimpse into their strategy. Our goal today, to pull out the most important nuggets of insight from this filing and, understand what these shifts might mean for you, whether you're a seasoned investor or just curious about finance.
And the Q2 2025 data is especially significant this time around. It gives us a really fresh snapshot of how a financial titan, Berkshire, is positioning itself in the current economic landscape. It's not just about the buys and sells. It's about the signals those moves send regarding their view on the economy, specific sectors, maybe even individual company valuations.
Okay, great point. With that context, let's drill down into the headline numbers. Right off the bat, the scale is pretty impressive. Berkshire disclosed 41 security holdings in this Q2 filing, and the total portfolio value, get this, a colossal $257,521,776,925. Just over $250 billion. And interestingly, they're actually holding more positions now, 41, up from 36 last quarter.
Yeah, the sheer scale of that portfolio is, well, it's difficult to really wrap your head around, isn't it? It's the result of decades of compounding. And that increase, 36 to 41 positions. It might sound small, but for a fund Berkshire size, adding 5 new lines, it suggests they're casting perhaps a broader net for opportunities. It might mean they're finding value across a wider range of companies now, maybe anticipating a market where returns aren't just concentrated in those few mega caps.
Exactly. So let's dive into those top holdings because this is where we see some really significant shifts. Number one, no surprise maybe, still Apple, AAPL, remains the largest holding. But here's the kicker. They reduced it by 6.67%. That's 20 million shares they sold. So its weight in the portfolio dropped from nearly 26% down to about 22.3%. That's a noticeable trim.
A very noticeable trim.
Then American Express, AXP, it's really cemented its place as number two. Its allocation actually jumped pretty significantly. It went from about 15.8% up to almost 18.8%. And interestingly, they didn't buy or sell shares. So that increase, purely price appreciation.
That tells its own story.
And how about the banks? Bank of America, BAC, moved up to third place. But, and this is interesting, it moved up despite another reduction. They trimmed it again by 4.17%, or about 26.3 million shares. Seems a bit counterintuitive. Finally, good old Coca-Cola, KO. Classic Buffett. Dropped to fourth place, but it's still a huge holding, and they didn't touch the share count. A real forever stock for them, it seems.
Okay, let's unpack those a bit, because each one tells a slightly different story. That Apple reduction, like you said, it feels like a significant de-risking move. It's probably not about losing faith in Apple. I mean, it's still their biggest holding by far. It's more likely about managing that single stock concentration risk. When one stock is over a quarter of your portfolio, even Apple, that's a lot of exposure. This continues that gradual trend we've seen. So maintaining it as core, but maybe taking some profits after its huge run-up, it's just, prudent rebalancing.
Makes sense. And American Express.
American Express. That's a different narrative entirely. The fact that its weight increased solely due to the stock price going up, well, that really underscores Buffett's or Berkshire's unwavering confidence in AXP. They clearly love its resilient business model, the strong brand, that premium customer base. They see it as a fundamentally strong company that keeps executing well.
So a vote of confidence through inaction, essentially.
Exactly. And then Bank of America, it moved up in rank, yes, but they continued trimming shares. This isn't the first quarter they've sold some BAC, so it suggests less of a bearish view on banking overall and more of a deliberate portfolio rebalancing within their financial holdings. They still hold a massive amount. It's probably about optimizing exposure, maybe taking some profits there too, without abandoning their conviction in BAC long-term. Careful management,
Yeah. Okay, that clarifies things. But beyond these shifts in the big names, here's where it gets really interesting for me. The completely new ventures. And the landmark new position this quarter, Q2 2025, is Amazon.com too. AM Zenith. Wow, we're talking a significant new stake valued at $2.19 billion. This is Buffett's first sort of major direct investment in e-commerce and cloud giant. I mean, for years, he famously avoided tech like this. What does this signal?
Oh, this is profound. Yeah, you're right. For decades, Buffett often said he didn't understand tech or couldn't see the durable competitive moats. This investment, it signals a pretty fundamental shift, or at least a recognition that Amazon has evolved. He tells us Berkshire now sees Amazon not just as some high-growth tech story, but as a mature cash-generating machine. Especially with those durable moats in e-commerce logistics and, crucially, Amazon Web Services, AWS, it shows a more nuanced, maybe adaptive approach to tech investing. It broadens the definition of Buffett stock.
A really significant evolution then. And speaking of broadening, you mentioned earlier the overall increase in the number of positions from 36 to 41. What does that wider diversification tell us strategically?
Yeah, it's definitely deeper than just finding 5 more stocks they like. That expansion includes several new, maybe smaller investments across different sectors. It really points towards a more broadly distributed risk approach for 2025. Maybe they see a potentially more volatile environment ahead, or maybe strong value opportunities are just more spread out now. Diversifying like this helps prepare for various economic scenarios. It's about spreading bets strategically to capture growth from multiple angles and mitigate the risk if one sector hits a rough patch. Positioning for resilience, I'd say.
Fascinating. Okay, and sticking with those new angles, let's highlight a few other notable additions. They aren't top 10, but they show some significant shifts in thinking. We've got Lennar Corporation and N. That's nearly $800 million combined value, a pretty big bet on home building. Then there's United Health Group, UNH. Whoa, a $1.57 billion position. That marks Berkshire's return to major healthcare investing after, exiting some others previously. And one more, Pool Corporation, Puel, a $1 billion position, and they actually more than doubled their stake through additional buying this quarter. Real conviction there.
Yeah, these are excellent examples of Berkshire entering new areas when the valuation and the business fundamentals line up with their famously strict criteria. These aren't random darts. Lennar suggests some optimism about the housing market's underlying strength, maybe a belief in consumer resilience, or perhaps a unique read on interest rates and demand. It's a significant sector bet.
Interesting given the rate environment chatter.
Right. And United Health. That signals a renewed belief in the stability and long-term growth of a major diversified healthcare player. After trimming other healthcare names before, coming back this big with UNH suggests they see compelling value and durable advantages there. Healthcare is essential, after all.
Makes sense. And Pool Corp. Seems a bit niche.
It does seem niche, but doubling down on Pool Corporation, which is basically a distributor of pool supplies and equipment, that speaks volumes. It emphasizes a belief in consumer discretionary spending, especially around leisure and home improvement. It suggests Berkshire sees these trends as more resilient than maybe the general market thinks, even in potentially choppy economic waters. A bet on people investing in their homes. Each one tells a story about finding value outside the usual suspects.
Absolutely. So, bringing it all together, what does this all mean? How can our listeners, whether they're active investors or just trying to understand the economy, take away something valuable here?
Well, I think it offers quite a bit. The big theme seems to be this strategic evolution. Towards more diversification, yes, but also this selective, careful adoption of technology, like with Amazon. These moves, they aren't just stock tips, they're signals about how a major market force like Berkshire is reading the broader environment. Buffett seems to be positioning for long-term growth, sure, but across a wider spectrum of sectors now. So for you listening, it might prompt you to think about your own portfolio concentration. Are you maybe too heavily weighted in one area, even if you love the stock? Buffett's trimming of Apple suggests maybe taking some profits, even with high conviction, is prudent. And it definitely highlights the need to constantly reevaluate what value means today. Are the old moats still durable? Are new ones emerging, especially in tech? That Amazon buy forces that question.
Exactly, and that's really what we aim for in these deep dives, to give you that shortcut, to help you feel well-informed about these crucial market shifts without having to wade through, dense SEC filings yourself. We try to distill those key insights. So, to quickly summarize the big takeaway from Buffett's Q2 2025 moves, we're seeing a really dynamic shift, more diversification, a nuanced step into major tech, and this constant balancing act between managing risk and seeking long-term growth. It's a fascinating glimpse into how one of the greats is adapting.
Yeah, and it really raises an important question, doesn't it? Think about it. Given Buffett's legendary reputation for value investing in traditional stable businesses, the kind he said were easy to understand with clear moats, what does this major new investment in a tech giant like Amazon, combined with the continued trimming of another tech giant, Apple, Tell us about the future of investing itself. Is that classic definition of a value stock changing, broadening, and maybe even more fundamentally, what does it say about what constitutes a durable competitive advantage in today's incredibly fast-paced, tech-driven economy? It's definitely some food for thought. Forces us all to maybe re-examine our own frameworks.
Absolutely. A lot to chew on there for sure. A great question to keep pondering as you look at your own financial picture. Well, thank you for joining us on this deep dive into Warren Buffett's Q2 2025 portfolio. We really hope you feel a bit more equipped, maybe a little more informed, and hopefully even more curious about the financial world around you. Remember, knowledge really is power, and we aim to equip you with it right here. Until next time, keep exploring and keep questioning.